Hello everyone. Today we will discuss another topic under banking and insurance law. Today's topic is Constitution of Insurance Regulatory and Development Authority of India IRDA. This topic has been covered under insurance law and we will discuss this regulatory and development authority for insurance. The list of topics to be covered here is introduction, the need for the authority, role of authority, mission of authority, how the authority has been established, what is the composition and constitution of authority, and certain other terms and conditions related to the authority such as term of office, their removal and the ground for removal and the meetings of the authority. Insurance Regulatory and Development Authority is the regulatory body in India that governs both life insurance and general insurance companies. India is a vast country that offers great opportunities to varied segments, one of which is the insurance sector. India witnesses the concept of a joint family where the head and most commonly the grandparents act as the guardians of each member. The head takes care of everyone's need and maintains a balance for fair practices to keep the family united. The head of the family treats everyone equal and helps the family in crisis, guiding them on how to steer out of it. Now, similarly to how the head of the family plays, IRDA runs the Indian insurance industry as per its set rules and guidelines. Now, is there any need for the Insurance Regulatory Development Authority? Then the answer will be yes. Insurance in India dates back up to the year 1815 with the first general insurance company established in Calcutta. Soon, with the passage of years, the market became competitive as many insurers started emerging both in life and non-life sectors. Each company practiced business on its rates and rules. It made customers insecure, which brought the credibility of the insurance market at stake. As early as the government realized this particular fact, they thought of securing the customer's interest first, and hence they came up with the establishment of an independent regulatory body, which later to be called as IRDA. Now, what is the role of IRDA? At one point of time, some insurance companies used to deny coverage to their policyholders. The basis of the denial was either their choice of business to underwrite or was their understanding of good risk and bad risk. To regulate the market and minimize any sort of partial acts, the IRDA was established. Like the banking system in India, which is regulated as per the guidelines of RBI, Reserve Bank of India, it restricts the bankers to not behave unruly with the bank account holders. The banking institutes are allowed to offer loan and interest rate as per the rates predefined by RBI. It leaves no room for the monopoly to take over, which in turn works for best for the masses. Financial institutions like banks and insurance companies will be successful in our democracy until market practices are for the majority and not just for the fraction of people. IRDA, on the same lines of industrial practice, plays a vital role like it ensures and encourages the systematic growth of the insurance industry just to benefit the common people who invest in policies to look for safety. It protects the interest of policyholders so that they could trust the system. It promotes high standards of integrity and fair dealings in the market. It also resolves disputes of all kinds and speed up claim settlement. It sets standards and conduct vigilance to check for scams or frauds in insurance industry. Now, what is the mission of IRDA? Basically, the IRDA has a mandate to fulfill these following. First is to protect the interest of policyholders and ensure fair treatment to them. This is the foremost mission of IRDA. Next is to facilitate speedy and orderly growth of the insurance industry sector in Indian economy for the benefit of common man and to give long-term funds which will accelerate growth of our economy. To ensure that the customers of insurance receive clear and correct information about the product as well as the services. Time to time, IRDA focuses on the information provided to the customer and save them from the fake policies. As per Section 3 of Insurance Regulatory and Development Authority of India Act 1999, establishment of IRDA was done by central government. It says that central government may by notification shall establish for the purpose of this particular act an authority to be called as the Insurance Regulatory and Development Authority. The head office of the authority shall be at such places as the central government may decide from time to time, and the authority may later on establish offices at the other places in India. The authority shall be a body corporate by the name aforesaid, having perpetual succession and a common seal with power, which means the authority will not be replaceable by any other authority or position, but whereas as concerned about other members, they will come and go, and the authority will continue to run on its own. Now, there are certain powers has been provided to the authority, such as to acquire, hold, and dispose of property, both movable and immovable, and to contract and shall by said name sue or be sued. The Constitution of IRDA. As per Section 4 of Insurance Regulatory and Development Authority of India Act 1999, the Insurance Regulatory and Development Authority is a 10-member team which is appointed by the central government of India, which consists of the following members. First is foremost one chairman, then five whole-time members and four part-time members. All these members are to be appointed by the central government from amongst persons of ability, integrity, and standing who have knowledge or experience in the concepts related to life insurance, general insurance, actuarial science, finance, economics, law, accountancy, administration, or any other discipline which would, in the opinion of central government, be useful to the authority. Provided that the central government shall, while appointing the chairperson and the whole-time members, ensure that at least one person each is a person having knowledge or experience in life insurance, general insurance, or actuarial sciences respectively. The term of office. The chairperson and every other whole-time member shall hold office for a term of 5 years from the date on which he enters upon his office and shall be eligible for reappointment. No person shall hold office as a person after he has attained the age of 65 years. No person shall hold office as a whole-time member after he has attained the age of 62 years. This means that all the members shall hold the office for the term of 5 years, or for in case of chairperson till he attained the age of 65 years, and in the case of full-time members till they attain the age of 62 years. Removal of members. A part-time member shall hold office for a term not exceeding 5 years from the date on which he enters upon his office. A member may relinquish his office by giving in writing to the central government notice of not less than 3 months, or be removed from his office in accordance with the provision of the section for the grounds of removal. The central government may remove from office any member who is or at any time has been adjudged as an insolvent, or has become physically or mentally incapable of acting as a member, or has been convicted of any offence which, in the opinion of the central government, involves moral turpitude, or has acquired such financial or other interest as is likely to affect prejudicially his functions as a member. and has so abused his position as to render his continuation in office detrimental to the public interest. Whereas in these particular two points, no such member shall be removed under this Act unless he has been given a reasonable opportunity of being heard in the matter. Meetings of authority. The authority shall meet at such times and places and shall observe such rules and procedures in regard to transaction of business as at its meeting as may be determined by the regulations. The chairperson, for if any reason he is unable to attend a meeting of the authority, then any other member chosen by the members present from amongst themselves at the meeting shall preside the meeting. All questions which come up before any meeting of the authority shall be decided by a majority of votes by the members present and voting. And in the event of an equality of votes, the chairperson or in his absence, the person presiding shall have a second or casting vote. The authority may make regulations for the transaction of business at its meetings.